we're showing that Bitcoin can actually be a good store of value, and that it is, in fact, something that we could compare to digital gold. Gold is a $20 trillion market cap versus Bitcoin at a $2 trillion market cap. That would imply another 10x from here, but that would put you at $1 million per coin.
Today's guest is Blockstream Chief Investment Officer Shawn. With over 30 years in institutional investing across hedge funds, public pensions and private credit, Shawn was among the first to back Bitcoin from a traditional finance seat. Now at Blockstream, he leads their asset management division. And today we'll dig into Bitcoin's macro potential, how institutions such as pension funds are thinking about allocation, and why Shawn believes that Bitcoin could hit $1 million within the next few years. Shawn, welcome to the show.
Thank you for having me, Brian. Looking forward to today's conversation.
Okay, so let's get started. You also predicted that Bitcoin could potentially reach $1 million in the next 2 to 5 years. So what's actually driving this prediction? Is it monetary debasement? Are we looking at dollar decline? Is it anything to do with rates? Is it happening?
Yeah.
Is there like a sentiment and a paradigm shift across the globe?
Yeah, I think it's all those things. I think that, if you look at the dollar and the decline of the dollar over the last 125 years, it's lost 98% of its purchasing power. If you look at it just since the pandemic, it's lost 25% of its purchasing power. We all feel that when we go to the grocery market, right? When I go to the grocery market, I want to buy Captain Crunch cereal. It's now an $8-9 box of cereal. What used to be $4.99. It's painful, right? And people see it, they feel it, they know it, right? And so I think that has resulted in Bitcoin getting more and more attention. And I would say right now that there's a very strong conversation that's happening about, digital gold. Is Bitcoin, similar to digital gold, or is it digital gold similar to real world gold, in the sense that, both are impossible to counterfeit. Both have a finite supply or a limited supply. In the case of gold, it grows about 2% per year. In the case of Bitcoin, it's hard set at 21 million coins. And then you can convert both Bitcoin and gold into any currency anywhere in the world, into fiat. So they have these shared characteristics. So I think where we are in the journey of Bitcoin and the development of Bitcoin is that we're kind of in this phase of proving that Bitcoin is an effective store of value, right? And so I think that would vastly underestimate the potential of Bitcoin long term, but I think that's where we are today. I think that's what's going on. We're showing that Bitcoin can actually be a good store of value, and that it is, in fact, something that we can compare to digital gold. And if we were to reach parity with gold, gold is a $20 trillion market cap versus Bitcoin at a $2 trillion market cap. That would imply another 10x from here. So that would put you at $1 million per coin. And I don't think that's really I don't think that's really a long shot. I think that's going to happen. It's just a question of how many years does that take to happen. And I think that it will happen sooner than later.
BlackRock stated that digital assets are poised for robust structural growth and referred to them as strategic assets. Now, where do you see institutional appetite today? Where is it at? Are major pension funds finally warming up to the idea of allocating into Bitcoin?
Yeah, I mean, so maybe I'll step back and kind of talk a little bit about the experience that I had when we first tried socializing this idea that Bitcoin should be added to a pension fund. We began that conversation in 2019, so 5 years ago. And it took us about 18 months to kind of get to the point where we actually were able to get Bitcoin into the portfolio. Now, at that time, I can tell you that it was definitely a conversation that was not happening regularly. It was kind of a new and different thing. Our pension funds were sitting out here in the Silicon Valley. And so kind of one of the things that we always prided ourselves was to try to think like an entrepreneur with institutional resources. And so we were kind of trying to push on the edge there to try to get some new uncorrelated, returns into the portfolio. At that time, I can tell you it was very controversial. Folks that had a lot of questions from other pension funds, from consulting firms, et cetera, that were like, I don't know if this is a great idea. When we started socializing the conversation, I think Bitcoin was around $7,000 in 2019. When we got it into the portfolio, it was about $17,000. And so a lot of people felt like they were too late, and that we were like, we had been talking about it for 18 months, and it was taking forever to get things done. And that maybe we missed the boat. And we hear that today at 100,000, right? So people are like, oh my God, we missed the boat. Well, it's the same thing that we heard at 17,000. And this will get into the conversation later about Bitcoin and the price objectives. To give you context for like where we are today. So in 2022, I was invited to the State Association of California Retirement Systems annual conference, the biggest conference in California for California pensions. And we had probably about, I don't know, 200, people attend that session out of maybe 600, 650 that were registered for the conference. And we got a lot of interesting questions. People were very skeptical about Bitcoin in 2022, but we were kind of talking about how we got it done, how we got it in the portfolio, what that looked like, why we thought it made sense for the portfolio from a diversification standpoint to improve risk-adjusted returns. More recently, we were invited back in May of this year. And on this session, we had Dr. Adam Back, who I work with at Blockstream, led a session where we had about 600 plus people attend. So it was a very different, kind of, I would say, a very different reception, right? People are very interested. They're very curious. The next day, we had a follow-on session about a technical elements of, adding Bitcoin to pension funds. And there we got, I think it was about 30 to 35 questions from the audience, which we were told by the SACers, the State Association of California Retirement Systems, that was actually more than all the other sessions combined at the conference. So people are interested. It's a very different conversation than it was 5 years ago. And so I think BlackRock is tuning into that, and the ETF IBIT has really helped us a lot with socializing the conversation.
Yeah, if you look at the Bitcoin price and you look at the gold price, since all of these macroeconomic conditions, we've got unrest, geopolitical unrest, since January, actually, in the past couple of months, I suppose that trajectory looks like it could potentially play out. Now, let's sort of mention Bitcoin, I think, is becoming its own unique asset class, digital gold, store of value, or almost like a dynamic hedge. Standard Chartered Jeff Kendrick christened it as a dynamic hedge, where it's kind of a tech proxy, but also acts like a safe haven. But where does this put the assets that are further out the risk curve, altcoins and stuff like that? Now, is there still an appetite amongst is the appetite developing amongst institutions for these more flamboyant, sort of further out the risk curve assets?
I haven't seen that. I have not really gotten a lot of inbound about other altcoins. What we've seen with the institutional investors or the sophisticated investors is really a focus on Bitcoin. 99% of the questions that we get are about Bitcoin. I think that is probably because it's got such a strong first mover advantage. The principles of which it's designed around, I think resonate with a lot of sophisticated investors who maybe grew up around the idea of Austrian economics. So they appreciate the element of sound money. And I think also, the fact that Bitcoin's never been hacked, it's never gone down. The network itself, right now, you have exchanges that sit on top of that network, that human intervention and human involvement. Yes, there you have, seen things go down like FTX and what have you. But the network itself has never been down. And so that's very different than, say, the next two largest, Bitcoin competitors, which I'd say Ethereum, which has just been notoriously, prone to hacks, right? We had the most recent Bybit for $1.5 billion. Just 6 weeks ago or whatever. Solana, which has got a history of crashing and going down and offline and what have you. You just don't see that with Bitcoin. And so it's like, well, if you have the most secure network in the world, that's the most distributed network in the world, well, why would you go for the second most, right? And so that's the way I think most of the sophisticated investors view it. I think that, Bitcoin is where they would probably find the easiest entry point into the digital asset ecosystem. And then maybe for some more speculative funds for fund money or funny money where they're trying to go for, some outsized gains, maybe they would play with the altcoins. But we haven't seen it. We have not seen any inbound interest in altcoins whatsoever so far.
It's yeah, because you've mentioned a few times there are Austrian economics, and I suppose it could be a good point just to chat just in general about what that actually means. I suppose we're talking about Hayek.
Yeah, Ludwig von Mises, and it really kind of goes back to Ludwig von Mises, uh, who was out of Austria and was really grew up under the principle of a gold standard and a sound money standard, and really everything in Austrian economics really is derived from that core fundamental basis. So that Hayek, I think, would be one of the more prominent. The Road to Serfdom book that he wrote when he was in, I believe, it was the University of Chicago, or maybe it may have been London. Um, Hayek would be probably the more prominent, well-known economist in that space.
And that as opposed to Keynesian economics, which is basically to print stuff to stimulate growth and stuff like that. And then,
Yes, yeah. So Keynesian economics, I think, is definitely what has dominated the global monetary, elite's way of thinking about how to manage economies, right? So when you go into a downturn, you turn on the printing press, you get the government spending up, and you offset the decline in private spending. Vice versa, when the economy is growing or overheating, then you would pull back in the opposite direction, right? Whereas the Austrian economists would say, "Hey, you want to have a stable monetary base, and there will be booms and busts that happen, but you have to let them clear. You have to let the market clear itself." It's kind of like with when you have a garden, right? So if you have a garden, you need to pull the weeds to let the flowers bloom, right? And sometimes that's a lot of work and it's not a lot of fun, but it has to be done if you want to have a healthy garden or a healthy economy.
no, it makes a lot of sense because whenever you can print money at will from like a central bank situation, a lot of things that shouldn't get funded, and we pay like years later and down the line in a manner of like higher taxes or just inflation. But I suppose one of the arguments could be if you have like a sound hard currency, could that be prone to deflationary effects and also people sort of hoarding the value and a lack of liquidity? Is it like how do you get around those sort of situations?
Yeah, I mean, so deflation is certainly a real possibility, right? If we were to look at, I think actually a great example of this that the audience will connect with is the recent commercial from Coinbase where they show the price of a house in the form of Bitcoin and how that price of the house has been deflating, right? It starts out at 3,000 Bitcoin, and it's like 300 Bitcoin, and it's like 30 Bitcoin, and now it's like 3 Bitcoin. And yeah, that's sound money, right? That's kind of the idea. So I think, uh, you will have booms and busts with Austrian economics, and you will have periods where when the economy is slowing and contracting, where you enter periods of deflation. That can be better than, and I guess it's a question of perspective, right? So if we look at the devaluation of the dollar and the decline of the purchasing power of the dollar, which one's better? Would you rather have a dollar that holds its value, or would you rather deflate away? It's just a different economic model.
Well, yes, yeah. I suppose we used to have the gold standard, and then there was the silver standard in different countries around the world, and uh, so yeah, fiat is not necessarily like the traditional way of a monetary system. I actually don't know, but like it seems to me like it's relatively new. We go way back to the situation when the Federal Reserve was created in like the early 20th century and things like that. So, and then we had like the Wall Street crash and lots of other crashes since then. But so yeah, like we could go down that whole rabbit hole of comparing Keynesian and Hayekian sort of economics and stuff like that. But let's sort of like bring it back up to okay. So we've got this really innovative asset class, unique asset class, Bitcoin. Now Blockstream's Bitcoin and US dollar yield funds are, to me anyway, just reading up about them, getting familiar. They're very innovative, but some people worry about the complexity and risk associated with them. So how do fund managers manage like yield generation while maintaining institutional grade fiduciary standards? How do we maintain those
Yeah.
and try to use this new asset class?
Yeah. So, I mean, I think, you're right. It is kind of an emerging asset class, and it is relatively new. The let me break it into the two different, strategies within the credit markets, because stepping back, and thinking about Blockstream, Blockstream is a technology service provider to the Bitcoin ecosystem, founded in 2014, and generally runs on open source, right? So we are trying to provide software and tools for the community to improve uh, the functionality of the Bitcoin ecosystem. Now, when we started looking at where we were today, we thought, one thing that would be helpful is to commit more capital into developing a credit market for Bitcoin. So there have been some small attempts here and there to try to, get that flywheel turning faster. But what we're trying to do is really be a catalyst in the ecosystem. So how do we do it without repeating things that happen at Celsius and BlockFi and different things like that? So we'll take the income fund first, because I think this is a fund that is going to be extremely appealing to sophisticated investors that want to dip a toe into the Bitcoin ecosystem, but maybe are not quite ready to embrace the volatility of underlying owning Bitcoin principle. And so this fund, the Bitcoin, our income fund, is really focused on lending with Bitcoin serving as collateral. And so if you think about a pension fund or an endowment fund, a large sophisticated investor probably has a private credit allocation. They probably have a very strong understanding of direct lending, of asset-based lending. And so our job at Blockstream is to really kind of educate and bring them along the path of why Bitcoin is a pristine credit to lend against. And so what we're doing here is like, let's say that Brian has a desire to buy a flat in London for $2 million, but he doesn't want to sell his Bitcoin, right? To do that, he believes Bitcoin is going to 10x from here and wants to hold on to it. Well, we would be providing dollars or pounds in this case to Brian that would be collateralized by Bitcoin, and we would say, hey, you could do a LTV of 25 to 65%. Maybe you say, I have $5 million of Bitcoin. I'll put that against the $2 million, 2 million pounds loan for a 40% LTV. And then we'll say, okay, do you want a 6-month, a 12-month loan? How long is it going to take to get a traditional mortgage to replace that? Or maybe you're going to go work with Milo or some of these other Battery or some of these other folks that do Bitcoin mortgages, but maybe you need a in-between loan. So say, okay, matrix price that. So it's going to be, 0 to 12-month loan, 25 to 65% LTV. And then where you fall on that dot plot will determine whether what your interest rate is. It could be 8% if it's a short-term loan with a high LTV, or low LTV. Or it could be, 12% if it's a longer-term loan with a lower LTV. And how do we protect our investors? Well, that Bitcoin is held in a multi-sig trust, so that that Brian can't walk away with it, Shawn can't walk away with it, or Blockstream can't walk away with it. It takes 2 signatures to release the Bitcoin, and so that could be either you and the custodian, or me and the custodian, which the custodian would be kind of that neutral third party that would be reading the agreement to make sure that everything's being met and that all the terms are being fulfilled. Or you and I could say, okay, the loan is up. We agree to release the Bitcoin and the balance has been repaid.
Right.
You're on to your next transaction. So the multi-party custody really helps with eliminating the previous issues with Celsius and BlockFi and the rehypothecation of Bitcoin, where it was been lended out multiple times.
Mm-hmm. Yeah, this
Can't do
there are
that.
the issues with those last those examples that you said that crashed and burned in the past. And when you mention custodians there, are you able to mention any custodians that are working on this at the moment, or?
Well, yeah, I mean, so Blockstream's sister company, Blockstream Capital Partners, which is one of our affiliated entities, um, has made an investment in Komenu, which is out there where you are in London, and is I would say, the top custodian in the UK. They actually hold the UK government's seized Bitcoin, so extremely secure entity. So we are working extremely closely with Komenu to try to really develop solutions that are, secure, but also are customer friendly. One of our things. Mhm.
Yeah, so like these new innovations are actually really exciting, and I think the more they grow, they'll change how finance works across the globe. But how old are these? Are we talking about like 6 months old, 12 months old? When did you begin?
Yeah, you've got firms that have been out there working on similar ideas like Devify, like Unchained Capital in the US, so Devify in Europe, Unchained Capital in the US. Those have been around for years and have been very successful on lending against Bitcoin as collateral. Um, you know, the it's not a completely new thing. We're just trying to be a catalyst to grow it. And so we're trying to so it would be a new thing for institutional investors to enter the space, right? And so that's what we're trying to do. We're trying to get those people into the space because if you think about Bitcoin and the Bitcoin ecosystem, you have 2 trillion plus of wealth creation in this ecosystem, and it's generally short of fiat currency, whether that's pounds, dollars, euros, Swiss, whatever, yen. Um, there's generally a shortage of fiat. And so you have to think about, okay, well, who are the natural longs that hold fiat? Well, your pensions, your endowments, whether it's in the US, Europe, London, Switzerland, right? Those are the folks that are long fiat currency, have a natural need to earn a nice yield on their currency. And that's where we're really, Adam and I have been really focused on trying to socialize this idea and concept to try to bring it to the larger, bigger investors. So they're new. They're not there yet. We're trying to bring them into the space.
Yeah. And like, how would you say that is going at the moment? Is it, have you met obstacles, or have you met a lot of, what's the sentiment like?
Yeah, well, so I mean, I think it's still a relatively new thing. I think there are basically 3 pensions in the United States that have exposure to Bitcoin. That'd be Santa Clara, that'd be the Fairfax, Virginia plans, and the Houston firefighters plan. In the UK, we just had, I think it was Sam Cartwright, um, uh, was talking about one of the UK pensions now has exposure to Bitcoin, but it's anonymous. They haven't named it, but it's the first one. Alan Farrington held a conference, and we heard about this there for the first time, maybe a month and a half ago, 2 months ago in London. So, you have your first, UK pension that's in there. So, I mean, from a big picture standpoint, pretty tiny, right? I mean, we've got one pioneer in the UK. We've got maybe 3 in the US. We've got the Middle Eastern sovereign wealth funds that are definitely spending time on this. They're buying the ETF. So, this is, people are like, oh my gosh, BlackRock's getting into the space. How do you feel about it? We love it. We're like, hey, this is great. They add a certain legitimacy that enables Middle Eastern sovereign wealth to say, okay, we're gonna dip a toe into Bitcoin through the ETF. We own BlackRock funds. We are all familiar with BlackRock's institutional grade back office and middle office. We know it's not going to blow up overnight, right? So that provides a lot of CYA for investment committees, investment teams to dip a toe. Nobody gets fired for buying BlackRock, right? It's like in the old days, they used to say nobody gets fired for buying IBM. Well, it's the same thing with BlackRock in the institutional asset management space. They are not going to put their name behind something that they don't feel very confident about. So that's a great thing for us at Blockstream because it helps us socialize the conversation. It gives us some social proof that we're not out there by ourselves anymore. BlackRock may have gotten there 5 years later than we did, but they're here now and they're knocking on the door.
Yeah, it definitely helps. And it helps that sovereign wealth funds, you mentioned the Middle Eastern ones, are actually quite interested and actually actively buying the spot Bitcoin ETF, BlackRock spot Bitcoin ETF. Now, just on the subject of sovereign wealth funds, are we seeing any movement from other sovereign wealth funds? Like, what about the Norwegian sovereign wealth fund? Think that could ever move?
Yeah, I haven't heard about the Norwegians, and they are indexers, right? So they're going to be passive. So I mean, it wouldn't surprise me if they said, "Hey, this Bitcoin asset is growing, and we should have a slice of it in our portfolio." I would expect that if Norway came in, or there would be a passive allocation. I think you do have other countries, smaller countries, like the UAE, right? I mean, we have the Abu Dhabi fellas over there that have been buying bits of Bitcoin through the ETFs. They may be buying Bitcoin directly. We don't know. Um, you have El Salvador that has a substantial amount of Bitcoin that they've mined using their geothermal energy, low cost energy. You have Bhutan over there and sits between Nepal and China, I believe, using again hydro because they have this cheap hydropower. They've been mining Bitcoin and building up a stash. Um, so I think it's percolating out there. It's these smaller countries that are able to do it sooner than the bigger ones. I think though, once you see half a dozen, sovereigns, pensions, like if you got a CalPERS, or actually, if you got a CalSTRS, right? You have Scott Chan, who's the CIO at CalSTRS, who's pretty innovative CIO. Wouldn't surprise me if at some point that they really took a hard look at Bitcoin. And if you got somebody like that, that's kind of a seasoned, CIO of a multi-hundred-billion-dollar pension plan that says, okay, we're going in and we're gonna, even if it's only 0.5% or whatever, then you're gonna see a lot of people come in behind them.
Yeah, I suppose it's influential, seasoned individuals in these specific circles. When they start moving or making decisions, a lot of people just follow. Seems like, and then
Yeah, I think definitely.
is there like a critical mass? Do you think there's a critical mass where if it gets to this stage and enough of pension funds and sovereign wealth funds and corporate treasuries just make the move, you just have they're all going to make the move.
Yeah. Yeah. I mean, like, we saw that, the Wisconsin SWIB, State of Wisconsin Investment Board had bought some Bitcoin, right? And the ETF. Well, it turned out, the rumor is that it was just a basis trade, right? They were just making a relative value trade with the spot and the forwards. And, which is like a testament to how smart the guys at Wisconsin are, that they're actually playing that game directly themselves. Kind of head faked a lot of us that were thinking, oh, maybe there's Wisconsin's coming in for, an allocation, but they were just taking advantage of a mispricing in the market. But I think, if you get a few of those big names, you get some of the Texas plans or some of the California plans, they tend to be the kind of, Wisconsin, Missouri, some of the Florida plans. I would say those are the ones that are generally considered, the more innovative pensions in the United States. So if you get a couple of those that start moving with some decent size, I think that will, force the consultants, because you got to remember, it's like a triangle. You have your trustees up at the top, you have your consultants and your investment staff, and all three of them have got to kind of line up to say, we want to do this. And so, if you get a few large pensions that do it, then the trustees are obviously going to be in it. And then that will also get the consultants to really spend the time and get comfortable and, feel like they can make that recommendation as a fiduciary, because the consultant's also a fiduciary on a pension plan. They have to really understand the recommendation they're making, and they have to be very comfortable with it and be able to defend it. This is all, only 16 years old, right? Bitcoin's only been around for 16 years.
Exactly. And I suppose it's all the responsibility when it comes to you're dealing with people's livelihoods that they've been putting in month after month after month, for their retirement and stuff like that.
Absolutely.
When you think of it from that perspective, you can't make just any sudden movements with this type of stuff. But just chatting to Shawn today, and like you're sharing a lot of your insight, it seems to me that say if I had any Bitcoin at all, I would start thinking now, maybe I don't want to buy stuff with it. I want to borrow against it. And do you think that's a kind of is there a bit of a mood swing now where people are sort of going, this can be used to borrow against, this can be used as collateral, not just in institutional institutions, but also retail, just like retail people, then
Yeah.
bit of big when they're thinking it's now starting to think, oh, I could use this as collateral
Oh
to
yeah,
take out.
definitely. I mean, Adam and I were in El Salvador several months back, and we were walking around Bitcoin Beach, and which is where the Bitcoin movement started in El Salvador. We went to one of the farmers markets,
Uh,
and it was really,
I've been Sean, like I was there actually at the time that I covered it for the Independent when they did the legal tender, and I was down there, and it's a brilliant place. But yeah, yeah, go
yeah.
ahead.
I mean, it's really awesome to see it up close and personal. Like you see how people are using Bitcoin, and we videotaped some transactions with some young ladies there that were basically they were entrepreneurs with a small stall, and Bitcoin has so backing up one step for the audience who may not be aware. I mean, but you know. In a country like El Salvador or Guatemala or Bolivia or some of these other developing economies, a lot of folks do not have access to banking and do not have a bank account. And that can be as high as like 80% of the population that is unbanked, right? And so when you go to a place like El Salvador where everybody's got a phone and they can, essentially become their own bank, right? They can now accept Bitcoin as payment for receiving Bitcoin. It really opens up a whole new world for their financial planning capabilities, for their business growth capabilities, et cetera. And so what we saw in El Salvador was, a lot of folks use Bitcoin as a savings tool and kind of as like their personal bank on their phone or on their Jade on their cold storage wallet. And then they use like Tether for day-to-day expenses. They use the stable coin, and Tether seems to be the most commonly used. We think that's just a great combination because, you know, if you want to spend your currency that's depreciating, spend the dollar fiat stablecoin or the euro stablecoin, whatever. And then if you're able to save and start building savings, use that Bitcoin, and then that Bitcoin can become kind of the basis of your future collateral for lending and borrowing, right? And so that's one of our goals at Blockstream is to, this is several iterations out for us. We're not there yet. But one of the reasons we started the idea of the yield fund and the income fund is to, bring in larger amounts of capital into the ecosystem with the idea that eventually we want to have a button on the Blockstream app for that young lady in El Salvador where she can push the button and say, I wanted to post half a quarter of Bitcoin as collateral against a loan to fund my next 3 months operations. And, we think that that's going to just be kind of this natural evolution of the development of the capital markets and the credit markets within the emerging markets. And you don't see it as much where you and I are and, developed, in the United States or in the UK or folks sitting in Europe because we have very developed banking systems that work well. And, we have the ability to swipe our credit card or, to borrow against, our savings account. But folks in Southeast Asia, in Africa, in Latin America, that's not an option. And Bitcoin is really, what we believe is the future of finance. We think that you're going to see this shift to Bitcoin rails over time.
Right, right. Excellent. It's really interesting because we actually we went basically around the world there and went to what I think is a very unique and that experiment, that Bitcoin experiment that Nayib Bukele did, it transformed the country not just financially but also it changed the perception that people have of El Salvador. When I was going there in 2021, I remember my father said to me, "Oh, do you know it's got the highest
Yeah.
rate in the world?"
Yeah, yeah, yeah.
Good luck. He just put on.
My mom was asking me about it when I went down. She's like, "Are you sure? Like, are you sure you want to go to El Salvador? I don't know if that's a good idea." You're right, though. It has
Honestly,
changed.
when I arrived there, I got on the ground. There was a real energy, and it seemed like vibrant, and people were excited about this change, and it looks like it's all going in the right direction.
I think so. I mean, there was a great documentary that Milton Friedman did that I would encourage your viewers to take a look at. It's called Free to Choose. And it really just showed, it just highlighted, you take this rock that's sitting off the coast of China called Hong Kong, or you take the Taiwan, or you take Singapore, right? These countries that had no natural resources, right? But you introduce the rule of law, free markets, and a reasonable tax structure, and these countries thrive, right? They just grow. And I think Bukele has figured that out. He's like, okay, how can we be the Singapore of Central America, right? Or the Switzerland of Central America? We want to be that destination. And he was, like you said, I think, that country was probably one of the most dangerous countries in the world. And he was starting from the bottom and had to really clean it up and introduce, core principles, first principles thinking on economics and the rule of law. And I went down there and I was like, boy, this is great. I mean, I feel like I could walk around at 2 a.m. in the morning and not have to worry about a thing in San
Yeah.
Salvador.
Is it El Zonte? Yeah, El Zonte.
Elizonte was the beach. Yeah.
Bitcoin Beach was just beautiful and excellent. But I was even walking around El Salvador at night. It was 2021, and if you go to like the main square, you've got the church where uh, the guy was shot. And then if you walked around the outskirts of that, you got like lots of little market stalls and stuff like that. But everyone had their mobile phone, and
Yeah.
everyone got that Bitcoin wallet that he provided, or the
Yeah.
government provided. And yeah, it just felt like a really good atmosphere beginning in the country.
It's a grassroots movement. And
Mhm.
that's the same thing we're seeing in the United States with the strategic reserves. We haven't really touched on it, but it's fascinating in the US that you have all these states, I don't know, like maybe it's 20 plus states now, that have introduced legislation to create strategic reserves for Bitcoin. Right. And it's like, why are they doing that? Like, where is this coming from? We had the Washington, D.C. folks that said, well, we're going to do a Bitcoin strategic reserve from the top down. But you also have this big movement from the bottom up, and I think that was driven by the debasement of the dollar and the just irresponsible spending, frankly, over the last couple of decades. And people are now like, hey, we got to do something to protect our purchasing power. Bitcoin seems to do that, and you're seeing state treasurers initiate these programs within the state houses and state legislatures. And we've seen a couple of them go into law in New Hampshire and Arizona, and I think Texas now is the next one. So it's fascinating. You can see it in developing economies like El Salvador, and you can see it in countries like the United States, where you're getting a adoption of Bitcoin at many different levels.
Shawn, it's been absolutely excellent chatting to you today because we covered lots of ground there. And I just to finish off, so I'd encourage everyone to go catch up on a little bit of Austrian economics, as you name dropped a lot of different ideas there and individuals. So, full of insight. Thank you very, very much, Shawn, for coming on the show.
Thank you for having me. I enjoyed the opportunity.